All right, all right. It's the beginning of a new day, and we had the markets up, the futures up, the S&P at least about 30. They came down to about, I guess we're looking at 11 right now. Um, I did see them go as low as up 5. So we kind of an indecisive day. We had some news reports come out. Um, and some earnings come out. So we're gonna have to take a look at that and see what's going on. Um, so let's get started. First things first. Man, the futures are up 17 right now. That's not bad. It's not a bad open. Probably open up about 10. Um, so we had jobless claims come in, and this is not refreshing. Let's see if we can get them. There you go. We were expecting 351 initial claims. We got 362. So we beat, not expecting, but that was the previous. The forecast was 355. So we have more claims, initial claims, than we expected. And we have more than we did last month, but I'm expecting that the revisions come in because there's always revisions. So probably revise that up, and we'll probably have the same amount of initial this week as we did last. And then the jobless claims on the average, they expected them to be at 332. They came in at 340. So continuing claims are continuing. GDP hit right on the head. The growth rate hit right on the head. And that's really all that's important. The continuing claims came in a little lighter, came in a lot lighter. That's nice. So a lot of came in a lot lighter than were forecasted. So claims are peeling off. What's more important, they don't even have it up here. I don't understand why, but Powell is speaking before the House today. So I think everybody's going to be sitting on the sidelines. We're going to have a day much like we did yesterday, I believe, waiting for Powell to finish up. And then is a wrap. And tomorrow, we're not really looking. We have personal spending, personal income, and ISM manufacturing that are going to be market movers. But that's it. Then we got to endure a bunch of Fed speaks. The third quarter is coming to an end, so probably around November we'll start getting those numbers. What's big on CNBC is just the Senate reaches a deal, which is going to get knocked down by the House, so it's no big deal. And then just nonsense. So really, we're just going to be watching the Treasury, and that's going to be our cue on what's going on with the market. And here we are. We have the Treasury fired up. So here's the daily chart. We had this indecisive doji right here, and I was looking for the break in it to continue moving down. It rebound came back, but the setup hasn't failed unless it breaks the high. So it's still very possible that we mosey on down. And I do believe that we're going to come down and close up these gaps before we continue our march up. But we're going to have to watch the treasuries and how companies adjust to the higher interest rates. And that's more of a long-term situation than the immediate. So looking at SPX, very negative bar on the daily Wednesday. And this looks like a bear flag setup. We could go and test the lows again. Really not impossible. And those lows would be 43.05. We want to see it hold this. I mean, if we break that 43.05, then we have a really bad situation going on here. I think we could be rolling into a bear market if we break that because, you know, here we have a high and then we made a lower low, right? This is our previous low right here. And we came down and made a lower low. Now we're making a lower high. So this is a downtrend. If we make another lower low, that's it. We're in a downtrend. We could even argue that we're in a downtrend right now, but it could reverse. Although by the look of the the daily, it doesn't look like a trend reversal setup. And a trend reversal would trigger if it breaks above these highs. So it looks like, I mean, we look like we're in the beginning of a downtrend of a bear market. And hey, it's very possible, even probable, with Democrats running things in the office. So on the 60, we could put a trend right here, and breaking this line, we're probably going to come down and test that 306 mark. I'm actually thinking of how I'm going to play that. If we break that line, I think I might just look for something. I'm going to have to do that after we talk a little bit. Okay, so that's pretty much it. And then on ExxonMobil, just a quick, I mean, this baby is running. We're going to let it go. We got in down around the 55 range. So I wouldn't really chase it. I'd wait for it to come back. I mean, you know, I'm pretty confident you could probably buy this thing again around 57, 52 if you're interested in that sort of thing. Pays a 6% dividend. Verizon, another high dividend paying stock. And this one actually looks like it's ready for a setup. I would take an entry breaking that 54.74 price. Viacom, I like Viacom, and I'm looking for a $64 number. There's no dividend on this one. This is kind of outside my program. But a good entry would be above the 42.32. You can try it here, be aggressive. It just confirms that it's on its up move once it breaks that high right there. But, you know, if you want to sit in it and wait in it, I mean, I'm just sitting in it. I mean, I don't really expect it to disappear. Tesla is not something that I'm recommending, but it's on my attention list, and everybody's paying attention. It's just grinding up. There's no setup. You could call this a bull flag right there, and you could take an entry. And this would be a swing trade because it's a daily, but you could take the entry at 795.64. On the short term, or a shorter term, to get an earlier entry, you could use a trend line on these pivots and wait for it to break that trend line. So if it breaks today, it should break around the 90s, 790, 788, depending on how far we go into the day. But if you put that trend line in and just take that break of that trend line, you're probably looking good on a swing trade. The momentum is flattening out, so this consolidation kind of just supported this range right here, got all the cheap stock out, and it could be ready for its next leg up, which looks pretty good. If you want to play the bonds and the taper, I'm in TBT. We were talking about it for quite some time, probably since June. I've been talking about it. I've been in it a lot longer because I felt that bonds were considerably low, and there should be some tapering and some rate hikes. So I started to position myself to take that. The TBT is a short of the bond price. So the bond prices go down, interest rates go up. Anyway, this is just something you could just jump into. You don't have to look for an entry. It's a fundamental play. It's based on the idea that interest rates are going to rise, and if you believe that to be the case, I say $22 is not a hard shot. So keep your eye on that. Let's look at the other stuff that the free folk of the world like. His fuel cell, still consolidating, hasn't really given me an entry yet. The daily momentum is very bullish, so you could probably take an entry break in that pivot high. And I like pivot highs because I'm just looking for a confirmation that we're moving up. I don't really need to be in at the bottom and out at the top. I like to get somewhere in between. As long as I'm buying it cheap and selling it high, I'm happy. On the 60s, it looks like it's going to drop off. So I'll just let it consolidate. Also, these are interesting times right now to just start throwing your money into the market. Just doesn't make sense. So many variables out there. You know, let all the nonsense get out of the way. Or maybe buy what you like on dips, and then we'll start moving up again eventually. Here's plug power. Actually, the patterns all look the same for these stocks. So really, you could take it on a break of the pivot high, but I mean, no reason why you can't wait and just watch it. Meta Materials. I mean, I don't see an entry there either. Nice consolidation, but I'm not looking at any entries yet on this. It's just too erratic, too whippy. It's just not giving me anything. AMC, see you real soon. Again, we said we would stay bullish until it breaks that line. Once it breaks that line, I think you're going to probably fill that gap right there at that 16. So all you apes might want to get on board with the shorts. Smile Direct. I don't know. I get all these things. I see nothing here. Just let it keep floating down. It's floating down right now. Maybe at around 514. Well, we're pretty much there, but it might stabilize around 514. It just looks very, very negative. Yeah, there's definitely no entry yet. Tesla we talked about. Lucid Group. Didn't. It's consolidating. I mean, that's a very negative bar. It's probably going to break that bar and come down. Got a few gaps down here. It could possibly fill in. And again, everybody's just kind of backing away from these memes. Sophie Technologies. You know what? Just hold off until it closes this gap right here. Your sister's Aunt Fanny. Yeah, see that gap right there? Yeah, let me make my life a little easier. Yeah, well, not that much easier. Just look for it to fill that gap right there at the 1519. And that's probably your entry, although technically it's not really giving an entry. But I certainly wouldn't make any moves on it until I see it fill that gap. And anyway, that's the wrap of the day. Now we're just going to wait and see what the market affords us. What are we looking at? Dow's up 83. NASDAQ's up 45. And this is all just flat opens. I wouldn't rush into anything. The S&P's probably up about 8. I didn't see it yet. But anyway, that's the morning meeting. We've got about 20 minutes till the market open. So everybody just stay calm, be at peace so you can think clearly. Don't get emotional. If you're feeling emotional, you get too much money in the market. So good luck trading today. All right. We're just waiting for the market to start. And we got about 5 minutes. Futures are just trading off. We'll probably open flat. See where we go from there. That 5-minute bar kind of has a hammer. If we continue yesterday's trading, we may see a move up. You never know. I mean, at the end of the day, it's just a lot of books cleaning. So it could, the technicals could go out the window.
Still no, yeah, I think there's a lot of two-sided sentiment on this one that maybe they're not going to be able to kind of get it figured out across the be smaller today with that decline. Yeah. But its problems may be reflective of larger issues that we've been talking about for quite some time, and in fact spent a good amount of time on today. Again, when you read the press release, they talk about unprecedented supply chain challenges have been impacting the industry pervasively, and they do so as well say steeper cost inflation escalating by month, so month to month, especially later in the quarter, and they were simply unable to offset that in terms of raising prices and or helping with their own margins. So sales and gross margin were clearly below, and clearly no tailwind really from the kind of housing-related spend and that's whatever they weren't able to.
Hey, you're welcome, Tommy. I don't know what you're thanking me for, but you're very welcome.
Price to sales ratio, it's amazing what these big stocks trade at. It's got up to like 0.4 times sales. It's going to plunge back to 0.2. So effectively, they're already priced for no real growth.
I'm suspecting just the general stream you're thanking me for.
Lower receipts and supply chain challenges. Got a downgrade of Starbucks today. Atlantic goes to neutral 105 as they cite David, China, and U.S. labor costs. The only, that's a theme that's running through a lot of the calls last few weeks. The one bright spot today, you might argue, is Wells on HD. Home Depot, they reiterate overweight. They actually increased their target $5 to $365. They met with management. They say we're increasingly comfortable that the housing backdrop is still strong, and they are going to be able to navigate the supply chain stuff and the inflation stuff. Right, and I mean, Home Depot also a company that would be being able to find people on that front, and maybe not necessarily as big an input cost as some of the other ones. It's like the third time maybe since June we have seen a slight.
Oh, there it is.
Order filled.
Nope. I got a bad boy off. What are we even doing here, man? We're ripping up.
Do you have a lot of thoughts on what we heard about SPACs yesterday from the likes of Chamath? I do. Some of which I don't feel might be appropriate for our air. Listen, he is one of the champions of SPACs. He's made an enormous amount of money from being an early sponsor there. Certainly benefited from some of the early enthusiasm that we saw amongst retail for SPACs, and of course we saw so many different people bring their SPACs forward in terms of sponsorship, and we still have hundreds and hundreds of SPACs that are looking for potential deals. I've talked often, of course, about what I at least is the misalignment of incentives, oftentimes, given that the sponsor can make money.
All right, well, we're up.
Trading around 7-something. Redemption level is 74%. Actually lower than some we've seen. But again, back to this idea. You're talking about 74% of the shares being redeemed. The cash that's brought into the company is far less than had been obviously in part because they're funding a company that may end up being like underfunded in terms of its cash needs, therefore may have a dilutive equity offering in its future. That at least becomes a question. And again, I'm not back to the transparency on that. We're not getting all the information perhaps we need in a timely fashion in terms of the density. But these
The way we go.
stocks are trading well below that.
Yeah, it's a massive, like 6 month long indigestion that the market's been going through with this huge load of deals that went through. What's also interesting is that it's happened alongside this whole idea of the concept type stocks, where it's, let me give you our 5-year projection pitch deck, and we're going to price off this huge total addressable market. Those types of stocks have struggled. So even the classic theme of a SPAC target, is a little bit suspect right now. And I think, I come away with it saying, you got $370 billion of equity issuance year to date, the first 3 quarters of this year. You're up 10% from last year, which was a busy year. The market's absorbed a lot of that. Part of it because $700 billion in net inflows into equities in the first, 9 months of the year. So it's been this very active push back and forth. I think it's a net positive that the market's been able to allow SPACs to fall by the wayside largely. But it's still this overhang because you have all these companies looking for deals. There's like a few hundred of them that still need to find a target. Still more about that, roughly. And if Jim were here, he'd say the quality industry to keep research, keep eyes on these companies is limited, right? We don't have the bandwidth to absorb that many new companies with the same quality research. No, completely not. I mean, there's not many fall through the cracks industry-wise. And so, look, I think it goes back to a time of where there was a retail kind of let me buy the story type thing in the market back in 80s and 90s. And I think to some degree we have that energy back in the market. Although what's interesting is, and I was looking at these numbers this morning, the retail traders have really become less active in terms of buying call options. That source of demand out there, it's coinciding with the market struggling a little bit here. And the S&P has spent most of the last 2 weeks like under its 50-day average. Before that, had not spent more than a day or two under there. So it seems as if there's a little bit of a flagging of that bid, and that's maybe a slight character change in the market, even if the overall losses haven't been much, and it has been in the context of kind of a healthy cleanse.
It's funny, I haven't looked back at our old friends, the meme stocks, in a little while, based on what you're talking about. I do see AMC shares up down. I've not noticed it. Still up 1,500+% year to date, but they have been down lately. So $25 billion market value only a couple of weeks ago, if I recall.
AMC down like 25% this month.
Yeah. Okay. I'm not actually seeing that. However, Lucid shares, I don't know what they're doing today. They had a nice day yesterday. LCID, of course, said they would begin deliveries. The stock is up yet again 2% today. I'd like to come back to that name, certainly, Mike. It's one that is reflective still of hope.
Absolutely.
They're going to start to roll off the assembly line, but the Air Pure, they've got all sorts of great names for their various cars.
Oh, it's really, you understand why people are taken with the story, with the product, with what it could be. $43 billion market value for Lucid. Yes. Ford's at 56.
Correct.
So that gives you the scale of like what you give credit for in terms of everything being on the comm versus, well, yeah, they maybe had EVs figured out at Ford to a large degree, but they're kind of going to be eating their own legacy product line a little bit along the way. But maybe it just means Ford's that much cheaper.
We did learn yesterday, Carl, that Chamath has been a seller of Tesla, which was somewhat interesting.
As has Candy Wood, last couple days, which was a topic. It did come up with the chat between Kara Swisher and Elon Musk at Code. The closest thing to the stock discussion was when he said, look, I've said the stock's too high, and it didn't do anything. I'm not sure what I'm supposed to do, is what Elon said. But we're definitely keeping an eye on how Tesla is moving. At this point, Tesla is certainly more important to ARK funds than ARK funds sponsorship is to Tesla. I mean, ARK is like a 0.5% ownership of Tesla. It's not in the top 10. Larry Ellison owns 3 times as much as ARK does. So I feel like it's much more about how she chooses to weight, and it's a pretty consistent 10-12% weight across ARK funds. So it's not that ARK is turning its back on Tesla. It's just that it needs other owners out there. It's big. It's too big. Yes. ARK is leading the Dow. David, I don't know if you want to talk about the Acceleron deal or Molnupiravir, which apparently, according to the study,
I know I'm quiet. Sorry about that. You might be hearing my CNBC in the background. I'm just actually texting and working with some folks and looking at some trades.
Talk about this Acceleron deal. We can also get back to multi-pure here, but the Acceleron deal is one we'd anticipated.
Order filled. That was me, just imitating it. What do I got? October 4th. I'm not really looking for a directional. I might take it if we break that bottom. Let's see if it's even worth it. Yeah, it's 10 points, 5, 2.5. I don't know if I'm going to take it.
So tadalafil is actually the key drug here, and that came back to Acceleron in 2017 from Celgene. They essentially got the drug back. Celgene didn't want to develop it at that point, and they have. And it was in early 2020 when we got phase 2 data from that. You can see it if you look at a chart of the stock, that the stock did move up at that point pretty dramatically. But we're still waiting on phase 3, and that's an important component here, and one that's actually worth mentioning. This is the largest price ever paid for a company without what we would call pivotal phase 3 data, that $11.5 million. Merck's taking a risk here. Now, is it a big risk? Well, the phase 2 data was very strong, but nonetheless, the pivotal phase 3 data, they're just really starting those trials. They're not going to actually get the answer to those trials till the end next year. And the expectation is that you would not see a drug on the market until, let's call it 2023, and that's being pretty aggressive. So there is risk here for Merck. There's no doubt about it, and given the $11.5 million, now there is potential multi-billion-dollar market for this drug. It would compete against the likes of what J&J actually bought when they spent, what, $30 billion to buy Actelion for the same treatment, the same PAH, the same of Now there is also a hope over time, of course. You brought usage, other areas of hypertension come into play, and sales therefore even accelerate beyond what they might be for PAH. So take a look at Berkshire's responding quite positively. But interesting to know, 400 employees. You know, we talk so often about technology companies and their ability to obviously create a great deal of wealth. Well, this is part of tech in a way. So 400 employees, $11.5 billion. Not quite Pharmaset, which Gilead bought years ago for, what was it, 9-10 billion, and only had about 90 employees. But it gives you a sense here in terms of the intellectual firepower at these companies and what you're paying for, really. What Merck is paying for, and it's an interesting move on their part. It's not the huge deal, but it's an important deal under new management. Remember, new CEO, new head of research in the company, and it will.
There goes the break of the low. I didn't take it. Looks like we're building a bear flag on the 2-minute. Got a bear flag on the 30. Second.
As I said, of this new team at Merck. And guys, back to molnupiravir, which we've talked a great deal about here for, frankly, 18 months now. They're getting closer to that oral antiviral that you would take if you actually get exposed and or show early symptoms of COVID, and that would essentially knock down the virus very quickly. Take a listen to this.
The primary completion date for our studies is the beginning of November. We do have potentially the opportunity for an interim look at the data before that, and with that, then the potential for potentially looking at an emergency use authorization for the end of the year.
There it is, Carl. You know, we've been talking about this for a long time, so maybe they get that emergency use by the end of the year. It will be important. There was a period of time where we thought it actually would be on the market prior to vaccines, and it'd be so important. Then it appeared, well, maybe it won't be as important, but of course with the Delta variant and with the possibility of unfortunately other variants as well, this attacks them all. This doesn't affect the spike protein, so it has effect against all potential variants.
I did like how Gottlieb's language has gotten stronger. I think he yesterday said there's no question we are going to get a therapeutic. He got Moderna creating a new campus to do more mRNA. And by the way, the reproductive rate is below 1 in 47 states and the District of Columbia, which is exactly what you'd want to see going into the fall, but before it sticks. Still to come this morning, the Fed chair and the Treasury Secretary back on Capitol Hill testify about COVID and the economy, this time before House Financial Services. Got the Dow up 57 off of the opening highs, and a look at the bond report. Take a look at how Treasuries are faring this morning. We did get the 10-year up to 155, currently just a shade below that. We're back in a moment.
All right, I don't like that 30-minute, but I'll tell you what, before that 15-minute mark, I'd rather see it down here, and maybe it will push up. But we have Fed Powell in about a half hour at the House, so, or before the House, and that's really what everybody's kind of gelling around. So the PMI just came in, and I believe it came in at 64, which is still expansion. So, I don't know. Strong economy, man. Let's have a look at those interest rates. Yeah, they're up a little bit. Momentum on it's fading off. But it didn't trigger that shooting star the way I had hoped it would. That would have rallied the market. And I'm really expecting a little bit of a rally before a sell-off. Here's the interest rates. That was the shooting star I was expecting. This sucker should open lower, though. I guess I kind of blew it up right there. But we're getting like a double top right here. We can even put a trend line on that bad boy. Really starting to enjoy this software now. So you could see the momentum fading off. We put in a lower high. It could very well just turn around, trade down. I think it's going to close a few of those gaps myself. It's a quiet, sleepy day. I'll take it. Lots of pressure the past few days. In the past few weeks, actually, like 3 weeks. Like once I got involved with these hedge traders, oh, the market just went to hell, man. And I've been coddling these children. It's exhausting. Absolutely exhausting. Ding, 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 ding. In this dirty old part of the city.
Watch that, Julia. Interesting. Thank you. Although, and David, we talked about the share price before at 340. Last 2 days looks like a pretty firm floor for now.
It's funny because I do have this conversation with a number of asset managers about it. The large societal impact of Facebook. Are you concerned? And many of them come back to, yeah, it's not great. That certainly hasn't been great for society, but stocks cheap. I mean, that's where the conversation kind of ends. Not like it's expensive. In their ability to make money and margin. Now, by the way, there are people, investors seem more concerned about the iOS transition, what that's going to be for business price.
Exactly. It's the ad targeting, it's the effectiveness of the dollar spent on advertising. Although, that is where it's coming to bear on the stock price, which is the valuation. So it is now at a pretty appreciable discount to its output, more so than it has been in the past.
Why they say
And so on an outright basis, it's not falling apart. It's still like 11% below its high. But yes, it's certainly not, changing the trend. It's just the earnings keep kind of growing to offset that, and that's what I think that they should. I mean, strip out the cash they have, they don't really buy back a ton of stock, and you can make a case for why it's kind of steady value as opposed to.
We're just building a channel here. We're probably range bound for the day. Can't really call that a pivot high yet, but we're going to cheat and put it in. Junk debt sales. Hello, 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 hello. Just adjusting my mic. Testing 1, 2.
Growth slowdown that's enough to worry corporate America. To invest in junk bonds, you need a broker. But here's some ETFs. You can look at HYG, JNK ticker, and USHY. These are examples of high yield bond ETFs. These will help self pandemic lows, but below the S&P returns during the
Trying to break that trend line on the 2-minute. I don't think anything's really tradable right now until Powell starts speaking, or stops speaking, actually.
We are on watch now for the Fed chair and the Treasury Secretary to testify in front of House Financial Services. We'll see if we get any incremental headlines on top of the ones we got earlier in the week. Interesting, the discussion, I think, lately has sort of pivoted around Powell himself and the degree to which a second term might be clouded by either criticism from progressives or the trading controversy regarding capital. Absolutely. I mean, the betting markets see it as even money at this point as whether it gets renominated. What's fascinating is that it's hard to know what progressives might want more out of this model. Forget about the regulatory stuff that they're focusing on. Never had a Fed chair that has had such an expansive view of what full employment is, what the Fed is prepared to do in tolerating inflation
Hmm.
share today, regarding a split between trust between Republicans. It's been a fissure for a while, but it's widening since that trading controversy kind of blew up. So we're looking at some early gains here. Towers up 100. We're hanging on to 40.
Stamped.
Pelosi says she will have an infrastructure vote today. We're back in a moment.
What the fuck? Oh, excuse me. No, I know what it is.
So investors really need to be positioned for that. A lot of them are still sitting on concentrated positions, and so we're trying to make sure that that they're well diversified across those three areas that I mentioned.
If you're counting on that kind of reacceleration, why wouldn't you go whole hog on cyclical and value?
Well, because what we're seeing, right, is that there's still some really good secular things out there that are going to be driven by the recovery as well. And those names, whether it be a Broadcom or a Taiwan Semi, where they have both things going for them. They have cyclical recovery, and then they also have that longer-term secular expansion. So we want to be exposed to both, in addition to having some exposure to more pure, what we call smart cyclical stocks, whether that's a TJ Maxx, or a Six Flags, or stocks like that. So it's worth being in both areas.
So given the conversation we're having, your outlook for rates, for yields as we do head into 2022, and as we do await comments again this morning on the call from the Fed Chairman Powell about where we go from there. And I guess just as importantly, is there a point at which a rise in rates has
Inflation forecast percent in the longer term. Interest rates for the 10-year have been around 1.5, so they don't match up. But inflation is going to do what real growth is going to do. So we do expect interest rates to rise, and that's why we also have clients in that third bucket, names like Citigroup and Sprint, et cetera. And on the broader market, yeah, the rising rates certainly is complicated for higher multiple stocks, which is why we tend to invest for our clients more in the growth at a reasonable price. We want to avoid those particularly high multiple stocks, or at least keep them underweight. And that's, I think, a good way to balance those inflation and interest rate risks, which is really, really
I'm surprised that we're not getting the
Thanks for the time. That the Fed chair found supply chain issues and sticky inflation quote frustrating. And I wonder if you think that means that this transitory view is looking a little bit wobbly.
the transition is maybe a little longer than we expected it to be. I think many of the Fed were thinking this is sort of a 3 to 6 month thing, but it looks much more like a 6 months to 9 month or even a year sort of thing, because many of these, in some sense, the economy has done so well, and the demand has come so much in so many sectors. You're not going to get these expansions. On the rocks, Democrats are no closer to raising the debt ceiling than they were in August when it expired. But what do all of these problems have in common? Foreseeable. They're known things, not just to Democrats, but to the world. Now markets are taking notice. Our allies, our adversaries, are watching closely to see what happens in the midst of this chaos. But in the midst of this chaos, these have individual respective seats. And the truer view instill confidence in our financial system, especially that credibility of your institution connected to each one of them right. From Powell, your decisive action help prevent the worst of the economic impacts of COVID. We're thoughtful, deliberate, and transparent. The antithesis, I would say, of dangerous.
hmm,
And to think otherwise, frankly,
they're kind of slamming
from reality.
that broad statement yesterday.
Well, Biden proposed a $6 trillion budget. But Democrats couldn't agree on that either. So the Biden administration's Treasury Department can't even keep track of the $46 billion of rental assistance. So how are the American people supposed to trust Democrats with another $5.5 trillion? This isn't a plan. Democrat-run Washington tax and spend policies will only increase prices.
A bunch of showboating going on, or grandstanding, if you will.
Last several weeks, we've called on Congress to address the debt limit. I couldn't agree more. Yesterday, the House passed a debt ceiling bill that is doomed in the Senate. It's political theater, and they know it. We know it, and the American people, in fact, know it as well. It's theater designed to distract Americans from the fact that Democrats have no idea how to govern. They've known this deadline was coming.
Everything's at good value, so I mean it could easily go up or go down depending on sentiment. At least yesterday the market was oversold.
Charge of our country for nearly a year, and they did nothing to prepare for this moment.
But this consolidation gave it good value.
Bring the date forward by address the debt ceiling.
Or actually the 20th to the 29th it was oversold.
It is defined by dysfunction, incompetence, fiscal irresponsibility. Late in the game, asking Republicans to bail out your agenda to pass more spending, frankly absurd. This is no way to run the country. I now recognize the chessboard.
I'm a popular guy today.